All right, what's up? What's up? Here we are with another trading recap, and unfortunately, I'm down again, $46 on the day. This will be my fourth red day, and it's a bit disappointing. I don't like making these red day recaps, and even though how bad I don't want to make these recaps, I have to because I need to stay true to the community and to my channel. I want to be able to share my wins and share my losers and be as authentic and transparent as possible on this YouTube channel because of how hard it is to trade. Trading is probably one of the hardest careers out there, and anybody trying to do this is going to figure out real quick how easy it is to lose money over and over and over again. And there's not many traders out there that are sharing everything about their journey on the internet. And that's why it's so hard to find people to relate to when you are going through this process of learning and developing your strategy and trying to become successful in this industry. And it's just very hard to find somebody else who's as transparent and able to share the dark side of this career. And it's sometimes you can really dig yourself a hole mentally, financially, and emotionally, and it takes a lot of time to get back on track sometimes. And it's good to have somebody who you can relate to on the internet who's also a trader. And I know how valuable that is because it gives you like kind of a sense of hope, because if somebody else is going through what I'm going through and they're made it through and they're on the other side and they're successful, then I know that it's possible for me to get through this as well. And I want these types of videos to inspire you guys who are watching this, who are going to inevitably go through a red streak and a down period of where you just don't know how to trade anymore. You're kind of just losing it. You don't know when to buy, when to sell, how much to buy anymore, or how to even trade anymore. Those times will come. It just happens over a stretch of a red period. And it's so good to have valuable resources like this, somebody who is sharing their losses as well, so then you can go back and watch their videos of how they dealt with a losing streak. What did they do to overcome this and get to the other side and get back green and get back on the front side of their P&L making new highs? And this is I want this to be one of those videos for you. And so what I did today for about a couple hours was just analyzing my statistics. I know that I'm not doing too well right now. I've had 4 red days in a row, and now I have to see whether it's me or if it's just another market statistic, if it's just a regular standard, something in the standard deviation of my strategy throughout a certain amount of trading days, a certain amount of iterations. And so statistically, I'm running numbers. So I'm looking at my winning loss days. I have a 30% win rate, 70% win rate, and a 30% lose rate. So if I times 30% times 4, I did some numbers, and I got to twice a year, I'm going to have a 4-day red streak. Statistically, I'm going to have a 4-day red streak. I just reached, so from last June to this June, I had one time where I had 5 red days in a row. And so if I count that as well as a 4 red day in a row, because it does count, it's 5 days, so it also includes 4 days, I had 3 times 4 red days in a row. So if I go through my calendar, in 2021 in October, so I'm looking from last June to this June, October I had 1 time 4 red days in a row. February I had 5 red days in a row, so we'll count that as a 4 red day in a row. And then June, 4 red days in a row as well. And so that's showing me now I'm pushing outside of my standard deviation of my strategy. For a 30% win rate, statistically, that should only happen twice a year. Now we're at 3 times in 1 year that I had 4 red days in a row. So now I know that it's likely not just the market. It probably has more to do with how I am trading. And so then now I went into, okay, so what's wrong? What's wrong here? My accuracy, I'm going through my detailed stats, which you can get on TraderView, TraderSync. Trade Journal is a good one. TraderView, you have to pay for a monthly membership to get to get unlimited trades to upload. TraderSync, I think there's unlimited, but I don't like the interface at all. Trade Journal is a good one. You can do unlimited trades, imports, and it's free, completely free. That one I recommend as well if you're on a budget and you don't want to spend any money. But right now I'm using TraderView. For right now, I might make a jump over to Trade Journal in a little bit. But so using TraderView, you can get these statistics, which I recommend you somehow get these types of statistics, whether they're on your own or through a platform. And so now I'm looking like what is going wrong here. So my all-time accuracy is 64%. So 64% win rate on all of my trades. And so I go back. So what's my monthly average? 62%. Okay, so I'm doing okay. It's just a little bit lower than my all-time. Let's look at my 2-month average. 2-month average, 62%. I've been doing real well these past 2 months, so I know it doesn't have to do with my winning percentage. And so let's go now to the past 5 days of my winning percentage, and we can see. So from the 17th started my losing streak. My winning percentage is 60%. So my winning percentage went down 2%. That is not enough to trigger a 4-day red streak. It absolutely is not. It's not enough to swing my P&L from green to red. 2% is not enough. And so I know it's not my accuracy. I know it's not the amount of winning trades that I'm having. I'm having enough winning trades. Next, I looked at, by the way, I have pages of these notes here, just trying to figure this out. And next, I'm looking at my losers and my winners, my average loser and my average winner. So I had my average winner since Friday was $8. My average loser was $19. So that already triggers something here. My average winners are much, much, much smaller than my average loser, and that's a problem. And so let's zoom out to just the monthly stats. Just on the month, my average winning trade went up $6, and my average loser went down $1. So I know it's not my average losers. I know I'm cutting my losers in a good respect. It's only been $1 more on my average loser. So that's not enough to move the needle on my P&L curve. However, the winning trade, my average winning trade, there's a $6 difference. And then let's look at the 2-month. The 2-month, there is a $5 difference. So I know there's almost a 50% different. 50% difference if you're going from 13 to 8. 50% decrease on my average winner, approximately, maybe a little bit less. But that's so much. That's so much out of the normal statistics that I get that is now moving the needle from being a profitable trader to now being a not profitable trader. And I started to notice that yesterday. I started to notice that, okay, something is up here. And then today I finally got to the point where I have to start looking at my metrics and figuring this out, what's going wrong here. And now also what's pointing into that direction is my average position MFE. So if I look at my average position MFE, and the 2-month is 958. So that's my average position. They call it the average maximum interim profit during the trade. So this is the maximum profit on average that I could have during the trade of the hold period. And so that on a monthly average and a 2-month average is 950. On a 1-month average, that is 930. So I was profitable with that. So now let's zoom in to Friday. From Friday to today, my losing streak is down $3. So it's about 33%. So now that means, okay, even my potential losers from when I'm holding the stock is not as much to be able to even make enough to offset my losses. And you can even see that it's bigger than my average position MAE. So even during the trade, my potential loss is bigger than my potential gain. And then I look in here closer, my average hold time is 20 seconds for my winners, and my average hold time for my losers is less than a minute. So this is a little bit shorter, about 18 seconds, and this is about twice as short as my losing trades. So I'm cutting my winners too short, and they used to be on a 1-month average less than half a minute, and this is less than a minute. So I'm cutting my losers even shorter than what I am usually doing. Here on a 2-month average, I had a 4-minute hold time for my winners. And so even already having a short hold time, I cut it down even more, and now that is impacting my profit and loss. So that is where I came. That is my conclusion. It's not my accuracy. It's my hold time. I'm not holding long enough in my winning trades to be able to offset those losses. And I go through these trades here, and I'm like, oh, wow. Like I left here 20 cents here. I left 20 cents here. I left 20 cents there. I left like 30 cents there. I left some here on the table. I left so much more money on the table than I should be, and that's what's affecting my P&L. So that's just something I'm going to work on, and what I'm doing for that is for the A+ setups. My A+ setups are, I'm looking for, say, like pre-market into the open. One of my A+ setups are a gap and go. So this would be the gap. And as it opens, I'm looking for this to break. So I'm looking for some support. And so I would take a starter as it's holding, as it dips down below, and buyers are buying this up to hold the 9 EMA, and it pops up. So this is where I take my starter position, looking for a potential breakout of this high. I'm playing off of this high. And so unless this support breaks, this setup is valid, or unless there's a false breakout. And so as this candle is rising with volume, I'm adding into confirmation. And then as the price breaks, I should be taking my profit, then not taking my profit before their breakout. Now, a lot of the times, the past couple of days, my win rate is okay. So a lot of the times I'm taking my profit before the breakout, before the move even happens. And that is what's holding me back. And so in this case, I would take my profit here, but did do a false breakout. So maybe some of my position would be for a break-even trade or a small profit, or maybe even small loss. But if it holds the 90 EMA, curls back up, now it's like, okay, now is another play. Now I'm looking for the break back over this candle, 795, looking for a short squeeze, because price, if it was weak, this candle would have came in, shorts come in, and then this would break down underneath 740, and then kind of breaking down to the next level. But because buyers held this up, and you can see when this candle breaks down below the 9 EMA, you can see flashes of green on the tape. And that is showing you that there's buyers still interested. And so now I can take another starter position, and now I'm playing off of this high. I'm looking for the short squeeze. And as price is rising and volume is increasing, I can be adding into that confirmation. Before, when I was trading this, I was taking my profits on every little pop, every little pop. Here, I should have took my starter, adding into the break of 94, and because it's really close to a psychological level, I could even be a little bit more aggressive and hold and then add for the break of 8 and then sell on the pop. And so that here is a potential 30-cent move. But I wasn't getting that. I'm just scalping for a couple cents, and then I would take a loss on a couple more cents, and then I would be red. And that's what I was doing the past 3 days. So I have a page of key definitions of my day trading strategy here. I literally wrote everything down. Define when I should put in my starter entry. Define my risk and my stop level. I always have to have that before I enter the trade. And then when do I add? When do I see that this trade is working out in my favor and there's confirmation on the tape, the level 2 on the chart, and its volume is rising into a key level that I'm looking to break. And then you got to ask, well, when do I take profits? Those are the key questions that really define anyone's strategy. And I took a whole page here writing paragraphs of like, now what do I do in each one of these scenarios? When do I put in my starter? When or where do I put my stop level or my risk level? When do I sell and take my loss? When do I add to my position? And when do I take profits? And if you can answer those questions and apply them to the market, then you got a strategy. And so that's what I really did today, is just sit down and assess my strategy and go back to what I was doing to make money this whole time. And here I wrote everything down. I'm going to review this page tomorrow morning before I sit down and trade, and I'm going to focus on that. I'm not going to focus on taking my small gains and then chasing it back at a higher price. That's just not working out anymore. Hasn't working out for 4 days. I need to stop that. Because I don't want to be coming back here making a 5th red day recap. But if it does happen, I'm going to do it because I need to be authentic for this YouTube channel. It's very important to be able to relate to somebody as a trader. I want to be able to go on somebody's channel and see that they are also struggling. They went to a period of red days, and I can go back to their red streaks and look at their video and see what they did to do better. And that's what this video is. So if I do have another red day recap, I will sure as hell make one. I will make infinite red day recaps until I can't trade anymore. But here we are, small red. So let's go over these trades here. Yeah, so let's go through these trades here. First we traded, let's pull this up. So first we traded SMFL. So here's my intraday P&L here. I went red about $100, made that back on PEV. I was green for a minute. I was actually up $100 in a minute, and then I just gave it all back, and then I just red ever since. So let's go over SMFL. This one I think I was red about $48. I missed this whole portion here. I wanted to kind of see it like prove itself. I mean, I didn't really like the action too much. The volume wasn't that good for a penny stock, 400,000 shares. It's not the biggest. And so I didn't finally start going into it until this pullback here. It pulled back really hard. I scalped off the bottom, panic dip buy for 1 cent. Wasn't really worth it. Probably didn't need to trade this. This is not my A+ setup. This is a C quality setup, just looking to make a couple bucks, and so it's not really worth it right now with the amount of over trading I've been doing and not focusing on my A quality setups and just having so many red days in a row. This is not something that I should be even trying to do in this kind of market. And then it dipped down to the 9 EMA, and I started accumulating a position actually kind of high here. I started buying before this candle broke down, which is bad, not good at all. So I started thinking, so I bought at 67, thinking it would hold the 9 EMA and curl back up to the high. That was my thesis here. But there was nothing showing me that anyone is going to be buying here off the 9 EMA. This is a full-bodied candle and low volume. There's not buyers down here buying this up, and there's a wick forming here at the bottom of this candle. There's no reason I should be buying here. Dips down again. I buy again. Now my thesis changed. Now my thesis changed to now a bounce off the VWAP. So instead of the 9 EMA, I changed it to the VWAP, and now I'm in the red. So now it dips down again. And now it's all the way down to 61 cents. And I'm like, oh crap, like is this gonna keep going down? Is this it? Finally sell at 61.17. So that is literally at the bottom of this candle, 1,500 shares, down 50 bucks. Curls back up. Breaks back over VWAP. I start buying at 64. Start buying at 64. Thinking, oh, well, now there's buyers in this. Let's see this curl back up to the high. After I just sold for a complete loss, like a buffoon, at the bottom of this candle after a huge sell-off. This is a FOMO. Whenever you sell at the bottom buy at the high and sell at the low, and then buy back higher again, just flatten your position. You shouldn't be trading, because this is ridiculous. Back over 64, trying to look for like a squeeze up to 74, 70, 72, which is wishful thinking. This is low volume compared to this sell-off. This is not something that you would see and think, oh, it's gonna rip back up to the high and squeeze to new highs in 2 candles. This is low volume here compared to the sell-off. Take some profits kind of quick at 65 for a small win, and then holding still small position, add back at 64, thinking you would see like a higher low and then run up. This is wishful thinking. Look at this volume. Right here, this is a sign that I shouldn't be in this position. But I think it had to do with the emotions of having this thesis not work out and then losing money, and then it's just like, crap, like I'm doing this again. Like I'm already starting off red, and I don't want to be here. So that was the reason that I wasn't trading good here. I should have waited for some sort of confirmation that there's buyers off this 9 EMA. I can't just blindly buy into the 9 EMA expecting it's going to hold. If there's nothing on the tape to show me that there's buyers interested, I should always wait for some sort of support to show me that there's support there before I start buying. Maybe it's like this starts wick getting bought up back to 66 and 67. Maybe that's the sign. That is definitely the sign for me to at least take a starter for maybe the 1 minute new high and then back up to 72. But if it closes down here at a strong full body candle, that's not good. I should have definitely been more patient there. So got to work on my patience. So patience, waiting for confirmation, to put in my starter. And then also no average down. I don't need to be averaging down. Now this just increased my risk by 300% by adding another 1,000 shares. Lower, another full body candle. with no clear sign of buyers here. I didn't see a wick getting bought up back to the 9 EMA. Nothing, anything like that, and nothing on the tape. Just blindly bought. Not something that I'd want to be doing. So patience, not averaging down, waiting for confirmation to put in my starter. Showing some sort of support at that level. And that was it on SBFM. Then we can go over to CNSP. CNSP, I took one trade here. I saw that it was holding the VWAP. It got bought back up over to VWAP. Saw volume coming in, so I added at my first position was at 45. So up here, and now I'm adding. Then it gapped up to 48, and I was like, all right, high volume. This is going to squeeze through 50 cents. So I punch it and punch it again for 1,500 shares, looking for a break of 50 cents. And pulls back, and I'm like, is it going to break on this candle? Is this going to pull back and then just have that leg back up through 50? Got to be patient here. This candle comes in. Had no choice but to take my loss at about 45 cents, which was a small loss. Sorry, $51. Medium-sized loss. And that was it on CNSP. I was really confident it would break through 50 cents, but and these penny stocks sometimes can have been flying, so I never really know. I thought it looked good. I mean, I think I would have taken that trade again. I would have totally taken that trade again. I thought it looked good. CNSP. Let's look at the volume here. Let me see the volume. 500,000. It's not insanely big, but it's good enough to be looking at it. So let's look at VEDU. This one here, this had this huge wick. Then I saw a dip down below, then get bought back up and start climbing, reclaiming this wick. And I was like, all right, let's take a small position here. Maybe we'll get a break of 208. Got that break at 208, sold at 209, and then it started going backside from there. Very extended. This is a very risky entry. It's way off of the 9 EMA, and it just had a, what is this? A 10% run up. So very risky. I don't know if I should have been trading that because it really could have easily double topped there and then flushed down. Maybe I wouldn't take that trade again. And then we go to PEV. PEV was the one I traded the most. Here, so this dipped down below, and I saw buyers just buying this right back up. Now I took my position, 56, looking for some sort of move. I took my profit so quick. I left 20, 25 cents on the table there. This is why I'm red today. This is exactly why I'm red. I took 5 cents instead of 25 cents. I could have took 25 cents, and I took 5 cents. Here I went for, I got back in, bought, 20 cents higher, which I should have been selling at, not buying, at 95, looking for a break of 779 here, looking for the breakout and a run up to 8. It broke out, immediately reversed. Not even a chance to sell up here at 790. Kind of immediately just flipped. And I sold that for about a break even. Then this candle gets bought up, and you can see it on the tape. Very strong volume coming in as it's dipping below the 9 EMA. And this shows me, okay, it's still in play. People are still interested. And it may curl back up and squeeze. And so here I take my starter position at 69. As this candle gets bought back up. And here I am again now kind of managing. I guess I could say I was managing my risk here. I mean, I did sell at 59, but I sold half of my position. It did look like it could make that huge flush down. And I have seen this before where it kind of tries to hold, but then the next candle comes in and it just dumps. So I kind of did have the right idea with managing my risk here, so I'm not going to completely blast myself for selling at 59, but I was still holding 100 shares, and then I add another 100 shares at 778, and then taking it off so soon. My thesis here is a curl back up through 95. Why am I selling here at 76 or 78? It shouldn't be selling at 78. Should be holding for the break. I'm playing off of this level. If I'm playing off of this level, I should be holding if it's still valid. It's holding the 90 EMA. There's nothing showing me that it's weak. It's curling back up, for God's sakes. And so then I sell my position 78, and then here I'm adding 20 cents higher when I should have been selling, and adding here at 802, and then I get a terrible fill on my sell order, selling at 798 somehow. I forget how that happened. So this is just examples of me selling too soon. That's just that's been my problem the past couple of the days. And so that's just something I got to work on. It's just something I got to work on because I left 50 cents on the table here. My position was at 770. I left the potential 50 cents at all the way up to 820. 50 cents. 50 cents on 200 shares, 300 shares, that's 150, 200 bucks. Okay, so then here we got a first pullback after a fresh breakout. That's always one of the great setups that I love to take. 808, getting in here on this dip, flipping it for a quick profit at 814 for 8 cents. That's not bad. I left about 15 cents on the table if I got all the way at the high. Ideally, though, if you're going to buy the first 1 minute pullback after a fresh breakout, you want to wait for that test of that high that it just broke out. So if it breaks out one leg, pulls back, so if it breaks out up to 830, pulls back, load up here in the first 1 minute pullback after a fresh breakout on high volume, waiting for that retest of 829. Here it came up, tested 829, actually broke it by 1 penny. Broke it by 1 penny and coming back down. That should have been my area to sell. So about 820s, not at 814. So, I mean, a little bit left on the table there. And then here, a bit risky. If it's holding this area, still grinding up, you don't know if it's going to dump back down to the 90 EMA. So this is a little bit sketchier entry. Still went for a quick scalp, kind of front side scalping here. Then now 81, looking for the break of this high of this candle, taking it off at 834. Then get that pullback right. Let's see where the so this breakout of that pre-market high. So it's up over the pre-market high here, which was my thesis. Down here, I wanted to see the break of the pre-market high, and we did get pullback. Now I'm looking for a bounce off the 90 EMA. I'm looking for that test of the 90 EMA. Kind of start getting it a little bit early. But I do sell for a loss because it's not quite at the 90 EMA, so I didn't know if it still had a little bit more to go. And then this candle comes in and flashes down to 8. And I see this get bought up like no tomorrow. Instantly from 8, flips around 820, 830, 840. My first entry was at 817 as I saw this getting bought up. And this is a beautiful setup, probably the best setup today. Made $188 on it. This is where I was up $100 on the day. Should have walked away. I'll show you here, adding through as it's breaking the high. Sell it on the breakout. And then I'm now looking for the break of 850, which is the next psychological level. I get back in for 1,000 shares at 847 for the break of 850. Rejects, and I take a small 10-cent loss, 1,000 shares, or no, 5-cent loss on 1,000 shares, which is $50. Now I'm at $50, so now I'm a little bit frustrated here, and then I go back in for another attempt at 850. It starts rising up into 850, rejects to the penny at 850 again, taking another 6-cent loss or so. Now I'm only up $17, and now it's like, well, now I have to keep trading because I'm only up $17. And then I'm still holding 100 shares. Or no, sorry, I buy at the low of this candle here, kind of thinking it would hold support and curl back up and break 850 again. But boy, was I wrong. This thing dumped in a flash, in a blink of an eye, from 818 to 737. No chance on selling anytime before then. Sold at 747. So literally a 60-cent loss. Thank God I was only on 100 shares. But this is like the nightmare of every trader, is getting stuck in one of these 80-cent flushes. And it happened to me. And, it's not actually all that bad. I was only in 100 shares. So really, it didn't really make a dent in anything. But if I was on bigger share size, wow, that would have destroyed my week, my month. Pretty dangerous stuff. I'm sure that somebody got caught in this. And then I started trying to buy off the lows here, which is kind of just not the best setups. Is again, B quality setups, halt resumption, kind of just taking a couple cents, trying to minimize the loss. I did leave like about 20 cents here, 20 cents there, but they weren't the best setups. Then now we can go over, I did trade this again, so it did curl back up. Curl back up. I was thinking now we could maybe make that attempt now to 850, so I was taking a couple of trades seeing if it would rip up, but never got that parabolic move that I was looking for. Kind of just taking small scalps again, kind of unnecessary. And here, I should be waiting for that pullback. Did get that pullback, and this is where, I'd be taking that position, that starter position, even though it didn't go. I would take that position for a potential rip up, which we did get this huge wick that just came out of nowhere. But this is kind of the area that you want to look for some reversal. Like here, maybe you want to put in a position on the break over the 90 MA on this huge candle. And then now trying to ride this up to 850, maybe adding for the break of 820 and 827, and then test up to 850. Didn't work like that. But theoretically, that would be like the setup that I would be looking for in the moment. But it did not work out like that at all. I did take a quick scalp through $8 there. But yeah, this is a lot of just kind of nonsense trading, just scalping for a couple cents. I think, so what I defined was I need to wait for the A quality setups. I know the A quality setups that I trade. I know I'm very familiar with what I make money on. I just got to wait for that and hold for the level that I'm playing off of. Hold for the level that I'm looking for it to break, and only sell if there is weakness. If there's a false breakout, if it breaks support, if it goes to attempt to make that breakout and then like a crap ton of sell volume comes in, then that's the reason to sell. But if it's rising up and increasing volume, green is on the tape, and everything's just getting eaten up on the level 2, there's no reason for me to be taking 5-10 cent profits. I should be waiting for 20, 30, 40 cent profits on the break through the high. I shouldn't be only taking means the gains and then chasing it higher and buying higher when the stock has already made its move. And so that's what I'm going to focus on going forward. Down here, $46. Nothing, I guess, too detrimental of a drawdown, but it is my 4th red day, and tomorrow I'm going to come back again, give it another swing. I'm going to review everything about my trading setup and everything about my entries, my exits, my adds, and defining my risk. Definitely going to keep it small size like I did the past 2 days until I feel like I get my footing back. And if anyone else is in a drawdown, make sure you size down. You don't want to be having huge whips in your P&L curve. because that's just going to trigger so much emotions. So hopefully tomorrow is a better day, and I'll see you guys on the flip side of tomorrow, hopefully making a Green Day recap, and have a good rest of your day. All right, peace.